All right. Hey, everybody. What's up? It's Booksy. Today is Sunday, October 27th. Today, I'm going to do a quick overview, talk about maybe what happened last week at the end of the week, and what my expectations are for this week coming up. We're getting really close to our earnings for AMC and ultimately the elections. And obviously, at this point, like we've said this before, there's catalyst events on AMC, and sometimes you know, like anything, you could run up into an earnings or you could drop into an earnings. In some ways, you know, that's positive because we've largely come down into this earnings period, and we're getting a little bit of a bump ahead of earnings, but the volume is pretty light. And we'll talk about that a little bit. On the whole, this is a big earnings season, so you have some 770 in the last two on the combined in the last couple of weeks, and across the market. I mean, it's a huge deal. Um, so the S&P 500 is going to have a lot of your big name earnings. IWM, while it's representing the small caps, is going to have obviously a different set of earnings. Is also an earnings season as well. So, you know, just so you're aware, a lot of what we're seeing right here in this sell-off isn't exactly isolated. I think last week a lot of folks were kind of upset seeing these kind of pump and dumps happen and what looked like pump and dumps on AMC, because you're like, well, we're not really moving or we're not going very far very fast. But on the whole, like between AMC, GME, and IWM, it was a lot of the same. We really had this kind of walk down and what appears to me to be a bit of an LSPY, which is a last point of supply. Now, you might be wondering, well, why aren't you calling it you know, why not call this like a bottom? It looks like it's crossing up and over. I don't, I'm not perfect, and I definitely don't always get it right. But in the grand scheme of things, when we look at stuff like this, you can take it one of two ways. So you can look at it as if this is a bottom of this larger range. You can look at it as, you know, oh, it's an LPS of an even bigger range, or you can look at it as kind of a macro view and say, oh, it's a huge wedge. You know, has it broken down yet? These are the things that you can do in the market, and it's important to note that like the larger structure here is not broken down. And part of me wonders, okay, if it does, like where would it go, right? And what does seem obvious is that 2050, ever since it was marked off when we first had this big run up back in May, has been kind of an anchoring point for this stock on GME, for example. The same thing applies to AMC. You get this kind of anchoring around that original drop-in level. And I've got a couple different charts on my screen. I know it's going to be a little bit messy at times, but I'm going to keep them up for now. And when we dropped in, that level for us was 458, right? And so a lot of that pushing down, it was 485 to 450 down here. A lot of that pushing down has really been concentrated between 485 and 450, and that's kind of been the levels that we've been pushing down, largely acting as a support up until recently when we crossed down, and now we're kind of working our way back up underneath that. So you can understand my hesitation to declare this a definite bottom until we see that break back above, for example, 450 here on AMC, and then GME really pushing out from that wedge structure and getting back up to this $23 area would confirm all those creek crosses. And until then, you're really just kind of skating along the edge here. There could be a drop imminent. And when I look at this locally, what I see on the smallest time frame is I see a reaction that immediately goes and makes a new low. And then we see this up thrust type motion that comes back all the way back down to revisit the bottom. Now, on a technical trading standpoint, have there been motions like this where you're advancing and then you back up to like a creek, for example, if it's an SOS, and then you advance? Yeah, and I think it's designed to look like that in order to keep people kind of on their toes about it. It definitely looks like, oh, it could just be like a breakout that's backing up to the creek. And sure enough, on Friday, it didn't come back down beneath the creek, for example. The same thing applies to some degree. On AMC, we did make advancements here that backed up, but they didn't come below the creeks. And you can see I had drawn this out a little while ago, and I haven't really moved it. So it actually looks like it's a little bit, maybe a little low here. It didn't come all the way down. But we got that gap fill that we talked about, and then we just kind of re-advanced again, you know? So there's a lot of kind of like fake out moves down and up. And really what I see here is just a flush. If I just kind of wanted to summarize the whole week, I think that's the way I would do it. If you notice, we kind of start the week off at pretty much the same place we ended up, which is in the 430s. You have a push up, and then you've got kind of an S curve down to the bottom, that's your flush down, and then you get an S curve back to the top, that's your flush up. So if you look at that, in the grand scheme of things, the range that's kind of being defined here is between 417 and maybe 450, and 450 being the area we want to go over top, 417 being the area that we built out to support the previous week. So is this kind of walking up? Maybe, but it's also just kind of defining a bottom and the top, a trading range. We really don't have any confirmation either way. Although on the whole, what this looks like is that it's kind of breaking down. It's testing that trend here that we broke, and then it's recovering. You can't do that and break what I would call like the ice, this level of support that's rising, and then come back through it again. Typically that's a no-go, because usually then that indicates that this is indeed like a sign of weakness, like it wasn't going to hold that trend. You don't want to see it break down again. And I think the same thing applies largely to GME here. Like, again, I've got kind of different views on the screen, but same idea. It did push above certain, like this blue line, it pushed above certain creeks, and then it just broke right back through them. It just appears to me more like an up thrust, and it came way farther than 50%. I mean, a complete throwback on that move. On the move itself, it makes a lower low. So even though it didn't come back down beneath the creek, and you could see that as a positive, like, oh, it didn't break below there, it doesn't have to do very much to kind of show this weakness and follow through here. And in this case, it already came below, the uptrend. So it doesn't look great. Some people are going to look at this and say, it doesn't really matter as long as it holds 2050. This could be a 1, 2, 3, 4 quadruple flush. But the problem really lies in perhaps maybe the order of operations. If this had auto-reacted and then didn't make a new low and then came up to the top, I might be a little bit more bullish on this move itself. And the reason why I'm kind of thinking that it's going to try to flush, even if, maybe it's not completely successful in getting low, is because, again, we generated this kind of sign of weakness. We had really low volume overall until this last up thrust. The same thing kind of applies here for AMC. It pushed low here beneath that trend, and then it generates this up thrust, just kind of propping it up. If it comes down again, it's likely going to break down in more of a flag-like motion. And I think that at that point, you're going to come low to where that, essentially that sign of weakness is pointing down back to the floor. And I do think that's a very strong possibility to come back down to the fours. And I think that GME, it's a strong possibility that you're going to try to maybe dip lower. This sign of weakness is set up in a different spot. It's a little more sideways, less straight down. But, you look at the big picture and you're like, okay, if it fails to hold here, if that happens and it does end up hooking and generating more downside, there's a considerable distance that it could go down into the 20s, to get back to the bottom of that uptrend. And if there's any kind of a catalyst event or whatever to drop it through there, you're basically now below that uptrend. Now, that being said, is this something that's way out of left field, like completely hard to predict? No. I mean, so when it first started coming down, I hypothesized it might actually anchor around 2050 and then drop again. And I did like a 50-50 movement around 2050. And I found that if it drops that low, it's going to go beneath the bottom that occurred on September 11th, but it's possible that it come as low as that bottom that occurred back on August 5th. So when I look at this big picture, it's like, yeah, there's definitely an easy path down below this bottom here, which is 1933, meaning bears have set up a camp here at a potential halfway point. And then if you look at the big picture, it's like, sure, that same halfway point becomes another halfway point. If we go up to the next zone, which is right here, you can see right there where it was like anchoring, where we kind of just did that distribution from that top. Basically, it's like middling right there on 2110. You can see that drops you down to the lows. So I hypothesized we might see what appears to be like a breakdown on this wedge in order to kind of satisfy maybe the requirements on the whole. Some people are going to be like, well, I don't think it's going to happen. Look, this is approaching a creek 1, 2, 3, 4, 5 times now, and it hasn't broken it. So unless we get that jump back above here in the 2070s up to like 22, I don't, maybe like 2170s, excuse me, up to the 22s. I don't think we have confirmation yet, and I don't think it's a sure bet. And I think there's a possibility to come low, and it may need to come down and dip back down into this liquidity that was checked on August 5th. I find that to be fairly concise because when you look at AMC, also on the slightly bigger picture, and you go back and you look at that August 5th drop that we had, that huge double flush, that ended in a ridiculously long secondary drop. This is kind of where we've anchored now. If you look at that marker here, it's at basically 441, and that's right where we are right now testing those waters. So the goal may have been, and we hypothesized this a bit back in, late September, about a month ago, when we thought, well, if it came below 460, it'd probably go to 430 to 440 and test below here. And frankly, just again, big picture wise, the goal may very well be just we're trying to trade this zone right here and shore up the low fours before maybe any further advancement or change of character. And it's not out of the question. And one of the things that's interesting is if you look back at, again, the 31st of May, maybe May 30th, May 31st, and you go back and you look at May 30th, May 31st here on GME, we're really in the same spot. Both AMC and GME relative to themselves are back retracing the area that they were at in late May. Another part of the reason for this may very well be that, as we know, a lot of those 13F filings were done here around the 15th. There was a lot going on in this time period, and some of those reports that Vanguard made were actually right here. They were right around May 28th, 29th. I suspect, for a lot of reasons, that the area beneath, and we've talked about this before, it's nothing new, but the area beneath that 485, this region right here, is vitally important to Vanguard for a lot of reasons. This is really where we've been interacting with the whole time, and you can see now that we're really testing the bottom of that. And that's why I don't necessarily think it's a bad thing if we came down again to retest this floor. Although breaking below it, you'd have to see some kind of change of character if you came down low. And it could potentially come pretty low. I mean, the earliest weakness that we have here was on the 9th, where we made a secondary low. If it broke down through 4, I do think you could see 380s, potentially even coming down and filling that gap that we have on an extreme drop. I see that as fairly consistent with IWM, because for IWM, I've been talking about, which is the Russell, I'm talking about these iterative build-outs and how when you look at the creeks, there's a lot of room to the downside, down to 216 and then all the way down to 212, 213. I don't see that as incongruent with what we've seen in the previous iteration. The previous iteration did something very similar here on that pump up. Actually drove to the same price at 226, and then it dropped all the way back down and came back to 197, back to the previous floor. And in our case, that's like coming down to 214. There's a gap there that goes down to 212. It just looks right. It also would be a definite retest of this top. Notice that we hit a top here around 211 back in March. That top was never really checked as a bottom. When we came back and made support October 7th and 8th, we didn't come low enough to check that little region. So I have a lot of suspicion that we may be coming down there to do kind of a final bottoming check right where that gap began at 212, 213. I do think that holds the creek. I don't think that would be a problem. And I do think that going into elections, that could provide either a rally to the upside or a break to the downside. It's in a really good spot, okay? So for me, maybe that's my highest probability. We've also been doing this dance around the current S-curve, whipping around it like 50-50, and you can see I did a 50-50 markup right around it. I looked at trajectories. There's clearly a push-up here that fails to advance. You can see the push-up through those trajectories, which you can call them creeks, you can call them a trend, but they were established in the beginning. They failed to advance here, just like everything else on Friday, had that big push-up, then immediately dropped back down. It just kind of reeks of a distributive action. Again, yeah, everybody's going to look at stuff like that and be like, well, does that really matter? This case, maybe not. It depends if it came too high because it does have a secondary bottom here. I mean, it could be a 1, 2, 3, 4 kind of an M-shaped cross. But ultimately, if this is a phase B and it did need to come down for a spring or an LPS, you still wouldn't know whether it's an LPS here or a spring here. So even if this was bullish, you still wouldn't know unless it came down and then jumped the creek, right? Then it has to advance. And if it doesn't, then you're really just looking at probably like a hook. So in the grand scheme of things, like, could this have even another fake out, and then drive the price low? Yeah, it could. I think the idea here is just to keep it on the big picture, looking at where those liquidity needs might be. And there's just a lot between maybe 209 and 213. I think 213, that region, 212, 213 is the hot zone. So when I look at the Russell, I'm thinking that it's still very possible this could sell down again going into elections before the decision is made on which direction you're going to go. I'm favoring up regardless of who wins, but I think that, there's just a lot going on here with build out, and it has a 250. There's definitely like a $250 price target if this turns into if it hits that top again at 226, it's basically a rising triangle with a breakout target of 250. That goes in line exactly with what we've been seeing on these S-curves all year. So do I think it's inevitable? No, I don't. But I think there's a high probability based on this setup. That's a very tight target for that rising triangle. So if it can get that again and hit one more time and then push off, usually the rule of thumb is if it taps the opposite side 1, 2, 3 times, that's kind of your buy zone. Now, that being said, does it go all the way that low? No, it doesn't go down to 212. It only goes to maybe 214. Again, is it possible that we see this as an iteration like the previous where it just comes back to 214 and it teases the gap? Maybe. But I think it's also possible and not even that unrealistic that you could get like a flush down as if it's going to break out and then it goes the other way. Kind of like what we were saying with GME. The door is open for that. I don't think it would be a huge surprise. Maybe we'll camp out, at 216 and we won't get the gap until the last minute, or we won't get the gap at all, depending on the election results. And that 213, 212 ends up being a tease, That's not beyond possibility either. I guess what I'm saying is once it hits this top at 226, if it's gotten that bottom hit at 1, 2, 3 and it pushes out over that top, it's a very bullish action. So I'm going to be watching really closely to see if it comes back down and meets that trend again. I definitely see it as an opportunity to buy, in my opinion. If it does that, typically the recovery here has been pretty fast. So you can see like this is kind of the recovery zone for that. Technically, we're kind of sitting on it right now, just like we were back in September. So if it does drop, it's really already kind of made the move, in my opinion. It looks like it's already kind of done that push on it. So really right in the pocket right now. It could easily see that shake out and then drop down to check that bottom and then return. I think that's going to be possibly a really good opportunity. I don't like the idea of catching a knife, but it could be a really good opportunity for a bottom right there. So in my opinion, that's what I'm looking for. And then I think the same applies for AMC and GME. I think you've got setups that could potentially get you back down to the bottom here, maybe a little lower. And then GME also has a potential setup for as low as 18. But if it manages to hold, it may just hold here and not break the wedge. It may only go down to 1995 or thereabouts. I think that's also a high probability zone. I marked it off. I didn't mention that a minute ago, but I think it's possible. So that's what I'm thinking for this week. I don't expect a whole lot out of them. I'm not going to get into like anything else super major, but I do want to mention one more thing really quick on AMC before I kind of close this video, keep it brief. I've been doing a lot of digging on AMC and determining what I think is maybe like a patterned approach to this in terms of arcs and other things. I still have one possibility that this has a pretty major move back to the upside that could go all the way up to 13. We've hit other targets at different times. I said last week, maybe $6 is a problem zone, maybe $9 is a problem zone. They could get stopped there. or they could, institutions could start selling there. I definitely think it's a possibility it does that based on the action that we're looking for, the primary action that we're looking for in this setup. It would make a lot of sense to me, and that's definitely a possibility. I have done some other analysis on it recently based on what I found for MPW, and I did a huge thing about that in a stream, and a lot of people don't want to see it, but MPW really has a very similar setup to 2020 AMC, like hyper similar. But I'm starting to like do more and more and more with that and really do those comparisons justice. And one of the things that I noticed was a pattern for how this has interacted with, and it's really hard to see here, I know it's a mess, but one of the things is like the way this has interacted with these particular trends here, and they're kind of hard to see. There's a green line, there's an orange line. And what I noticed was that there is a continuity in timing. When you look back at the dates here, this goes from May to May. It's a 2-year cycle of down and then back up. And it meets the same target. It actually comes back to the same exact place, May to May. I took that and I turned it into a cycle. And what I found is that if you look at this in terms of approximation of timing, there's another May to May cycle here for the breakdown to like this next level. It's kind of interesting. So there's almost like a loop there. And then what else was interesting was this is the 50% marker here. If you measure it from top to bottom, it really structures the whole thing very well. I've talked about this previously, and I kind of was asking the question, why is May 2020 the middle other than a 2-year cycle? And I couldn't really find an answer. I'm still working on it, but I'm still exploring this idea. I'm still trying to work through it. But what I did notice that seemed fairly consistent and seemed fairly important was there's kind of this main trend building out on AMC that has this downtrend, at least on my chart right here, that starts from the beginning. It goes through these two bottoms, right? That's the easiest way to start the trend. When you take those parallels up to the middle where that crossover happened in 2020 right here, and right now it's between like $28 and $45, you start finding a lot of consistencies with that and that waveform and like where that broke out. And even like this particular point right here, this is really fascinating to me. It's almost like a mirror. So when you look at this, I know it's a little bit of a mess on my chart, but I just want to share this. If you go back and you look at where did it leave behind, these certain markers, you find there's like a lot of consistency there. Like coming across the middle, the place where it left this this kind of top right behind was back here in September 2019. It's the same middle, right? So there's an equal distance right here, which is very strange because it's almost like a perfect symmetry. It is, timing-wise, a perfect symmetry. I mean, it is perfect. Between where it took off and where it landed, you see that almost like a head and shoulder of sorts. Yes, this goes really high, but if you look at ultimately where it took off from, it's this yellow mark, which is where we had the big breakout here and the jump. And it's essentially the floor from this giant LSPY. That was back in 2017. It says $67 right now. But back then it wasn't that price, right? I think it was like 12 or something like that. I can't remember at this time, but maybe close to 14 or something. But it was right there in that pocket. Well, as I was looking at this and I was looking at where we are currently, I looked at those particular examples. And one thing that really stood out was that drop down zone from May 2019, that parallel acts as the top here on this secondary upthrust. In our current time frame, when I went and looked, that drop down is the same place as like $14 back over here. We basically plunged beneath that same parallel and we started another structure. You might be wondering why I measured it out the way that I did, but it has to do with these other factors like these multiples, right? And like where certain breakdowns happen and whether it makes sense. I did one from November to here and I did another one from August to August, and I thought the August one was probably the most convincing, and it's essentially just trying to mimic the same movement that happened here but down. But what I really wanted to point out was that particular motion right here means that there's not a huge amount of time, that there could be a very short amount of time from the run up until the secondary run up, because our early build out is actually really short. And so if we look at this as like a similar example, like, oh, this is where we broke down over here, you've got a really simple kind of mirroring structure here, right? And you can take that and you can build it out. If you got the center correct, and again, I'm not like 100% on this, it would basically imply that this is going to run up hard in June of next year, not actually January. Now, what's interesting is that leaves room for two options. It leaves room, so I mean, that's like a really big arc. But the thing is that kind of the shoe fits, you know, as they say. If you look at the build out, this has been really slow. We've yet to hit this high, but we did technically come up and hit that green line on the first up thrust, which we didn't do here. So there's a debate in my head of like, maybe we don't even need to do that, you know? There's a lot going on here. So while I do have this other motif where we come up to 13 and then we come back down, I kind of left that on the chart. It definitely seems possible that that could happen, that you could run up high, hit like 13 or something, and then retreat. And maybe from a horizontal perspective, that could make more sense. I'm starting to think more and more that the horizontal status of this particular zone doesn't really matter as much, because I don't think that we necessarily have to recheck 11s again. One of my arguments was that we're really coming to check that creek coming down, but in some ways we did do that here if we're just talking about the parallels. Now, did we check the other one? No. You know, it's way up here around 1360 in the end of November. And that's the one, I don't even have it on the chart right now, but that's the one that I'm kind of looking at like maybe, you know, if it went up again, it could stop at 940. That's the green right there. And if it went further than that, I think you could probably see it hit that creek at like 1380, and that would be this top as well as a triangulation of these 1, 2, 3 markers. Very convincing triangulation. The rest of it, though, follows suit, and I checked the this kind of build out just to double check and make sure, and sure enough, you know, 580, if you look at 291 to 580, you're definitely experiencing, actually not 291, that's where the gap is, but 237 to 580. You can see here, that's the 50-50 back to the top. Now, I know there's a lot going on here, but just focus on where my mouse is. 240s up to 14. The middle is 580. And if you look back here, the bottom, which was in the 2s at the time, now it says 10 and then going up to like 69. And you can see that middle is right here. And it's the place that when you zoom in, after that initial run up, that we kind of stop. It's like the 50% marker. And then it does break the 50% again here, and then it comes back up, and once again, distributes right along it again, and this is now at $27, right? That's the model here, is like reacts up, comes back, sits beneath it, secondary reaction, and then it dives below it to come back down to the bottom of the range. In that phase B bottom, you see the same thing here. It's the same marker. You get the 50%, you get the big push up, you come back beneath, and you, sure enough, hook right underneath. In this case, it's unfortunately like a 1, 2, 3, 4. This is the first time that I've really felt like there might be a sensible reason for that weird upthrust that happened back in July. Like somebody changed their mind or something. I don't know what happened, but it went right back above that 50% marker, and that would have been a distributive action. We already knew that was the case, like it was a partially distributive act. We knew it was going to be down for a little time after that, but it kind of makes sense of it if that's the 50% marker. So it really does. Now, what hasn't happened is we've not rebroken it again. We've never rebroken it again. And so there's a question in my head about, like, is it going to happen? And the answer is I don't know. You know, maybe it will, maybe it won't. But one thing that's really interesting about all this, and you're probably going to find it pretty interesting, is once you get here, not necessarily right now, although I'm not saying it's not possible, I'll never say that. Once you get over here, if this is measured out correctly, and I spent a lot of time just kind of looking at the comparisons, and what I found was that you would probably have a breakdown, if it does go up high, you'd have a breakdown underneath 591 or 6, and then you drop low, right? And you really go back down to get to either the gap or even lower, the bottom of the floor. Doesn't really make a difference whichever one. There was a lot of consistency with that and what I had found previously, in that you would go potentially to the low 2s before a major reaction. while that may not seem logical to some people who've said repeatedly that they don't think it go that low, when you look at where it went here back in 2021, in order to get a repeat move, this is really, really fascinating, because if you go back through and you look at where that marker kind of leapt up, right, ultimately what's being accomplished, ignoring kind of the extension here, which there's a lot of extension, is it's going back towards this marker. It's the other side of the bowl, right? You're basically just doing a 50-50 around the middle of that range back to the top in the SOS. Okay, so I looked at that and I thought, well, what would the 50-50 be here? And again, it's like, well, naturally it's going to be down the bottom. Well, when you add in the extra little percentage in order to kind of reach lower, if you come below the bottom here, you can come above the top here, you actually get right up to that orange line, which tests this macro downtrend. Again, it's the same parallel line. You can use the same line structure. I know it's a little messy on my chart, but it actually comes back and checks that parallel line structure, which, by the way, has a sign of weakness all the way back here on December of 2022. Again, right where that breakdown is, that's where we need to jump, right, going forward. And you can see it's right in the right place to also simultaneously jump over the macro creek coming down from here. It's an intersection point in August of 2025. So I have a strong suspicion based on that and a few other things. That is where it intersects both the level here going sideways, right, the other side of that bowl, the downward creek here, and that parallel this way, just like that was established back here in May, except it's an August move, which is kind of strange, I know, but it actually works really well. Going down to 2 and then all the way back up in a big June run-up move, kind of a 6-month delay almost on the previous one, and then breaking out again August into September. This is highly consistent with what I've seen on other things. When I did the build out for it, it worked really well because it takes you up to basically the top again to retest not only the horizontal LSPY level up here in the 60s to 100, which sounds like the previous all-time high, right? But it also takes you to the top of, and essentially you could prepare to distribute potentially. It takes you to the top area here, 80 to 90 bucks, and then you're right back at the top parallel, and essentially you've just got a massive wave structure. And sure enough, just like we measured out before, that wave structure timing-wise would terminate. Now, there's a lot more to it. One of the things is these parallels going up, which actually are identical, right? And if you take a look at them, I took the same parallels, this guy right here, and I looked at it in terms of where it broke down in November and how it coursed through here, and I have this blue line going up. I took that same parallel and applied it to the bottom point here, and it's identical, so that you wouldn't necessarily push out until further on based on the way this is set up. It seems longer, it seems a little longer winded, but that's because we didn't make that initial move up, so it looks like that part's compressed, but really it's like the same timing in some ways for that ascension. And so I'm kind of developing this still. I know I went on a little long, but this is definitely a possibility that you get a sort of a quicker move now that's got a longer winded sell down from basically a Santa rally going down to May of next year in a sell-off. And this is another thing that really caught my eye, was that when I looked at March to March, I thought it was really interesting because back here, March is where you have that Q2 transition period right here. And there's a lot of push-ups to this kind of middle level. And I thought it was kind of interesting that it came back to that same anchoring point at a later time before taking off. I went to look at MPW and a couple other things, and what I started noticing was that there was a proclivity to kind of return back to certain levels at certain times. And interestingly, this actually gets you back to March year over year at the same time. So it's a way of playing through all of this stuff, right, in order to get a massive push down, and essentially you're not moving year over year. It looks flat. And that just reeks of institutional behavior to me. So I'm going to leave it at that for now. I've got a lot more to do with this before I kind of finalize it, but you guys got my outlook for the week. I think it's a good looking position that we're in for potential upside. This is a whole nother scenario where we just don't go up. And that one kind of would bum people out, but this is like only on MPW over here. I've got one like that on AMC where maybe it only goes up to, and you can't see it, but maybe it only goes up here to like 5 or 6. But I'm just finding that there's like a strong consistency lately with a possibility of going up high now and then coming really low, or going up to 6s and then coming back down, maybe only like 530s and coming back down, and really not seeing a big upside until 3 to 6 months from now, next year. So anyways, that's all I got for you. I hope you guys have a good one, and I will talk to you later.